Hello and welcome to InvestSMART's quarterly update for March 2019 for the international equity portfolio. I'm Evan Lucas, our Chief Market Strategist and Portfolio Manager. What a difference a quarter makes, and a big change in terms of how we saw things. The international equity portfolio performed incredibly strongly in the last quarter, and that's not surprising considering that there were three main reasons really driving that. The first one was clearly the US Federal Reserve backing away from its hiking cycle. In fact, it's actually moving towards a neutral, even some would argue, an actual dovish stance. It's released financial tension. It certainly means that the flow of credit has increased, and that certainly drove through US equities. The second one was the fact that the US-China trade relation issue is moving into a more constructive phase, and that helped our Asian assets, along with the US and European assets off the back of it. The third and final one that you have to look at is that you're now also moving to an expectation that monetary stimulus globally looks like coming through sometime at the back end of 2019, and that really did also drive growth assets. So they were the 3 points that meant the portfolio jumped 10.91% in the quarter. Yield moved to 1.9% as we saw the VGS and also the IVV part of the portfolio really ramp up, around about 4.5% for both. Do need to highlight VGS. We continue to really like this ETF because it basically flexes. And although we had all that really positive movement in the equity market, it's probably down to bad news. And the reason I want to highlight VGS is that although something like Brexit, for instance, dragged on through the quarter, VGX continues to flex around movements. And the fact that particularly something like the FTSE, which has a very high exposure to international FX trade, did actually do quite well, and the portfolio picked it up through VGS. So we quite like what it is doing. Looking forward, and what we actually see in international equities is, as we said in that third part, is that if we do see a continued expansion idea of monetary policy, it will drive growth assets, and international equities are likely to perform very well. So a good first quarter, and one that we think will continue on into Q2, 3 and 4.